Welcome to another episode of Africa's Big Switch. On this episode, we are joined by Alberta Asafo Asamoah. Alberta is the co-founder and CCO of Liquify, connecting African exporters to working capital financing. She started in corporate banking in Europe before moving to impact investing and entrepreneurship. In 2018, she founded Algebra in the City, EITC, to provide quality education to underserved UK communities. Alberta helps tuition centres with curriculum development, customer databases, and funding. While building EITC, she worked as an impact investing consultant in East Africa. Alberta completed her MBA at Imperial College Business School, earning the 2021 Eddie Hunt Inspiration Award and the Women of the Future Award. Post-MBA, she became an investment consultant for SITSTAR's Women Entrepreneurship for Africa program, empowering 100 female entrepreneurs in Africa with funding. This is Africa's Big Switch.
Hi everyone, welcome to another episode of Africa's Big Switch. Today I'm hosting with Bolaji and we're speaking to Alberta Asafo Asamoah. Alberta is a co-founder of Liquify, which is an invoice financing platform connecting African SMEs to global capital markets. Hi Alberta, how are you doing?
I'm very well, thank you. How are you?
Good, thank you.
Excellent.
I guess we could get right into it. So Alberta, can you tell us a bit about yourself, your background, and maybe just general information about Liquify?
Yeah, sure. So my background is quite lengthy, so I'll try and slow down. But in terms of my career, so I was a corporate banker. I started my career in corporate banking in the UK, in NatWest, providing debt finance to large corporates. But then after about 4 to 5 years, I began to get more interested in working in the emerging markets, specifically within Africa. And the idea of impact investing, I kept reading about it. What is impact investing? How are we going to attract more capital into the emerging markets? And at that time, impact investing was not an attractive thing to say. It was new, but it wasn't a great buzzword, because I think a lot of investors thought that if you invest in a social impact business, potentially you won't get the returns that you require. But then for me, I was more interested in that space because I knew that there would be more impact when you provide affordable financing to SMEs and so on. So I transitioned into impact space, working for an impact fund. And what we were doing was raising capital from development organizations, foundations, private institutions to provide affordable lending to SMEs on the continent. And these SMEs were, typically 2 million upwards. So they weren't necessarily micro; they were actually mid-sized, and they had a lot of social impact. The revenues were growing steadily and so on. So during my journey in the impact investing space, I saw a lot of opportunities in Africa, and where investors could start to kind of develop and also drive liquidity into those markets. And then after working at the Impact Fund, I had an edutech because I love education, and I saw that there was a big gap to address, lack of, I guess, support for people within disenfranchised communities in London who don't have access to affordable tuition. So essentially, I created a business called Algebra in the City. And what we're doing was we're providing consulting to parents and students who were looking to get into higher educations or gain access to like private or grammar schools, and also providing them with subsidized tuition, because a lot of people can't, of course, afford tuition. So then I wanted to digitize that whole process, democratizing access to education. And that's where Algebra in the City stemmed from. And that is something that I think it was like a hobby. I knew that it wouldn't be a business that I would do in the long term, but it was something that I was passionate about. So at the same time while I was doing that, I then also continued to work within the impact and also investing space. So I ended up working for a VC as well, called SeedStars in Safim, where I was working on a program called Women Entrepreneurship for Africa, And this was where we worked with development organizations like the EU, OACPS, to deploy capital to high growth women businesses on the continent. So that's a bit about my journey. And then, of course, after leaving Fim and Seastars, I met my co-founder, Nadia, and we decided to work on Liquify together because we were attacking the idea of capital to SMEs in emerging markets in a different way. And we instantly clicked and wanted to explore that area together.
What an interesting journey. So in fact, actually, you mentioned your co-founder. Could you give us a bit of more background about like how you met, how you both decided you want to take on this journey together?
Sure. So I was introduced to my co-founder through an advisor about sort of over 2 years ago, maybe 2.5 years ago now. And of course, she's not African, so she's Russian, and she worked in corporate banking as well, but in trade finance. So she has domain expertise in trade finance. And at that time, she was working at Citi in Asia. And whilst in Citi, she saw the opportunity for SMEs to get access to trade finance. But at that time, because it was just after the global financial crisis, a lot of banks were not, servicing the needs of those SMEs. Rather than a lot of the capital or the trade finance facilities were going towards large corporates, and because of a lot of regulatory reasons. But then she thought, well, where can we actually do something what other continent is also facing similar issues when it comes to accessing finance or liquidity in the markets? And she, of course, began to explore Africa. So then when we were introduced, of course, I was working in the VC space and also impact investing in Africa. So we started to talk about how to drive liquidity into the markets. And the best and most effective way to do that is through trade finance. And that's because really you're looking at and it's because a lot of investors typically find Africa quite risky. But then when you pair Africa, right, an African exporter with a multinational buyer, like let's say Tesco, they become more comfortable with the transaction or, or like the what they're looking at. So essentially it's like structuring the deal in such a way that will be attractive to foreign investors.
That's really cool. In fact, I wanted to, I might take us a little bit back because you said you're working in corporate and then you've gone and done so many different things, from like education startup to like by impact investing. But I think my question now of curiosity is why impact investing? Like what is this desire to get into impact investing, to like leave your corporate job and then go and do something very risky?
Sure, good question. In fact, I would say throughout my like university experience and also even secondary school, I'd always liked like charity or getting involved in something, giving back in different capacities. So like I used to be, in the campus organization for Relay for Life, UNICEF and so on. So I always had that in me to kind of do something that gives back. But I think as I got older, I started to realize that I do like charitable things, but I think in order to kind of change a country or increase like economic development, I don't necessarily believe charity is the only way or just should be the main source, because I think you have to solve the underlying issues, right? Because if you give, let's say, money to a business, or if you give money to a country or whatever, sometimes there's no understanding as to how to actually make that money. So with impact investing, what I found attractive is that you're investing in businesses that have kind of built a solid foundation. They're creating social impact. They are, their profit margins are maybe not like a high growth startup, but it's kind of steadily growing. That all you're doing is providing them with affordable capital for them to continue to have that social impact, create more jobs, so that then they won't have to focus they won't have to focus, heavily on, I have to deliver, these profits to investors, but actually they can do both without that pressure. And that, for me, that's what I liked about social impact investing. It allowed for small businesses and, small businesses in Africa to actually have a lot of social impact while still steadily growing their businesses in a more sustainable way.
Thank you for that. And then now probably a bit more into Liquify.
Sure.
So could you tell us a bit of a background of like the journey to building it? Like how does invoice finance actually work? And why would you say it's like beneficial to SMEs?
Sure. So in terms of Liquify, so Liquify is an invoice marketplace connecting African SME exporters who are trading with, let's say, multinational buyers with working capital financing. So essentially, what the SME does is they go onto the platform, of course, after us doing due diligence and KYC, they upload their unpaid invoices. So if, let's say, they're trading with Tesco and they have to deliver $10,000 of bananas to Tesco, typically there'll be payment terms that would say, Tesco will have to repay them in, let's say, 30 or 60 days, whatever it is. Within that 30 or 60 days, a lot of the SMEs still have to pay their farmers, right? They still have to pay their employees and so on. So some of them cannot, they can't afford to wait that 30 or 60 days. So what we do is we provide financing for them at that point where the goods are on the ship. And then in 30 or 60 days time, their buyer pays us back. So it allows the SMEs to, of course, reduce their working capital cycle, pay their farmers quicker if they're in agriculture, and focus on other new business. So the benefits, of course, of Liquify is, as mentioned before, is that it allows for SMEs to reduce their working capital cycle. It puts less pressure on them and also allows them to focus on other business opportunities and buyers that they have to also, ship goods to, and it allows them to kind of operate efficiently as well. And at the same time, from the buyer's perspective, it also takes that, the SME kind of following up, daily or something, where's my payment? Where's my payment? It also gives them that comfort that actually, we can continue to do business without, pressure on both sides.
That's really amazing, honestly. And like when you mentioned, like in terms of like the payment, they honestly can't wait sometimes. I think like this is going to be very beneficial for a lot. And I'm hoping like more people get to tune into this to like hear about the opportunities. But then
Yeah,
even in terms of that as well, I want to
yeah.
ask, so how do you find these SMEs and how do you connect them with like the global capital markets?
Sure. So a lot of the SMEs, because I worked in the impact space, and of course worked in Africa. So a lot of them were the initial pipeline was through our referrals, people that I knew and so on. And then of course trade databases. So there are some databases that have a list of some of these exporters where they're trading to, maybe which are the most effective, which corridors, like which countries are trading with whom. So that allows us to focus our attention accordingly. But then also we've established partnerships, with different organizations. So for example, logistics, for example, in order to kind of scale as well, because what we want to do is provide embedded finance, which means that there may be some organizations that have a similar customer profile to ours, but then they don't provide our product. So that means we'll embed our product onto theirs, and then we can sort of easily do pre-qualify their customers and then provide their customers with affordable working capital. So that's been a very effective way for us to, of course, find these SMEs. And we've also been engaging with trade organizations. So trade development organizations that have an incentive to support SMEs on the continent and to invest in specific areas like agriculture, and also trade organizations that are industry specific. So pineapple, coconuts, banana, apparel, so on, just so that we can kind of scale more efficiently, and then also allow their members to get access to capital that they may not otherwise have.
Brilliant. I really like this. I think it's refreshing. I don't know about you, Sandra, but I feel like I haven't heard much in terms of startups or companies that are kind of at this intersection. Really
Yeah.
cool.
I agree. I
Really
agree.
cool.
Yeah,
And
no,
I go
yeah.
on.
No, definitely. I think, alternative financing is still not as popular in Africa, as it should be. I think because banks are the main sources of capital and financing in Africa, unfortunately for SMEs, there's a lot of rejected applications when they go to banks because banks have their own like capital requirements that they have to adhere to. So they can't serve the SMEs, not because they don't want to, it's because because of regulations and so on. But then SMEs, when they do finally have access to some of, some banking facilities or some other lending facilities, it's too expensive. So then they might have a facility, but they are not able to grow, right? And where alternative, financial instruments come in place is that it allows them to get more access to affordable capital. It diversifies the access, and it basically improves sort of economic development, because then there's more capital being allocated and driving into Africa.
Incredible. And so I have two questions, but let
Sure.
me start with one first. So I think the first one is, can you walk us through the process? So let's say I'm a cocoa farmer in Ghana, in I don't know, close to Accra, and I want to I want to sell to, I don't know, Saints, no, who makes chocolates? I don't know. Some Swiss manufacturer.
Yeah.
Um and how do I get onboarded? Like, what do I pay? Like, how does
Mhm.
the process work?
Sure. No, a good question. So one, you can go directly to our platform, our website, liquify.digital, or you can go to a partner, and that will be rolled out at the end of this quarter. Yeah, so if you're an SME, you can get access to our platform. You can go directly to liquify.digital. And what you do is you submit an initial application. And what that will enable us to do is pre-qualify you. So it's the basic criteria is that you are based in, let's say, Ghana, Nigeria, Kenya. Those are our key markets, but then we are willing to also look at some other, if you're based in another Anglophone country. So one, you have to be Ghana, Nigeria, Kenya. Two, you have to be exporting to a buyer in OECD markets, mainly Europe, North America, Australia. You of course have to be exporting a minimum of you should have been exporting for a minimum of 2 years to that buyer, because we need to be able to, of course, assess your trading history with that buyer. So those are kind of like the minimum criteria that we look at. And then once we've pre-qualified you, we of course notify you. Then we conduct KYC and AML checks on you, the business, and also the founder. Once you've been approved, then we start doing the due diligence process. So that would require like your bank statements, your invoices, confirmation from your buyer on the trading history, and a number of other things. Once we've approved the due diligence and your buyer has also confirmed the relationship, then we tell you are ready to upload an invoice. So then in uploading an invoice, again, let's say you have to ship to Tesco $10,000 worth of goods. You invoice Tesco when the goods are on the ship. You go on our platform, upload the invoice, bill of lading, and some other shipping documents. We verify that with the buyer, and the buyer confirms that yes, that is accurate. And then we would extend the financing to you within sort of 48 hours. And then upon maturity, the buyer pays us back. Of course, throughout that process, we also have to credit score the SME. So during the due diligence process, after looking at the documentation and so on, we actually do the credit analysis based on, of course, the trading history and so on. And we assign a credit score to the SME. So we kind of manage that whole process. Before then, of course, you can upload your invoices for financing.
Oh, I really like the credit scoring system. I think we need more.
Definitely.
Because I think a lot of SMEs struggle to get loans from the banks
Yeah.
because it's difficult to verify
Yeah.
that they would pay back. So I noticed that you mentioned from some of the solutions you provided, I'm sensing some of the they might have come from some of the challenges that you may have faced. So I noticed in terms of managing the risk, you've
Yeah.
the proper KYC and AML checks, the proper in terms of partnerships and logistics, you've done some partnerships. So I guess that
Exactly.
kind of leads me to
Absolutely.
the question of what are some of the challenges that you faced?
Oh, yes. So I'll start off with working in Africa in general and then to the product. So I think generally in Africa, of course, when you're introducing a new product or something that is not as used, there's a lot of course education involved, right? So that of course takes time. And two, I think in terms of people's adopting or executing. It tends to be slightly slower in Africa, because sometimes we might be involved in a conversation with I don't know, like a trade organization or something, and sometimes the lead time from the initial conversation to when something is finally signed can take a long time. And for me, I believe it's because in Africa, there's not much delegation. Typically, you need one person to kind of sign off on maybe a partnership or whatever arrangement there is. And that means that it takes a lot of time because, of course, that person would probably be looking at multiple things, or multiple deals, or multiple partnerships, whatever the case may be. So I say generally in Africa, I would say that's one of the challenges. Being able to move quickly, I would say. Education as well. Educating on the specific products is definitely a tough thing. And also the fact that documentation is such a big thing, and specifically within trade finance, because it requires shipping documents, statements, and invoices, and so on. And typically in Africa, it's only now that a lot of processes have been digitized, right? But before, a lot of people do business on WhatsApp, on like paper that is installed in their house. So then when you're trying to cross-reference certain things, it takes a long time. Hence the reason why what we are trying to do, or what we are doing actually, is digitizing the whole process. So our due diligence process is completely digitized. And of course, with AI, right, ChatGPT and so on, we're able to kind of pick up information from all the documents that we use, so that then we can kind of cross-reference them against one another. So those are the three key challenges, which is education, slow execution when it comes to maybe partnerships or so on. And then thirdly, of course, the fact that it's very, very, very paper heavy. Hence, our solution really solves for some of those key issues.
Yeah, and that's the thing, especially in terms of the partnership and stuff. It does kind of should I say, almost like a inherent thing that I hope gets worked out. But then how do you tend to overcome that, in terms of when you're waiting for somebody to sign off on something, or
Yeah.
especially with and I assume there are tight deadlines as well. And then if
Yeah.
someone is not getting something through the line, it's going to be a problem. So how do you usually resolve that?
I think that one of the key things is, if you're a business, let's say if you're a UK business, or if you're introducing a product into Africa, one, it has to be mutually beneficial. You're not going to come into the market and say, I'm going to bring this product, and assume that people are just going to, just adopt to it. One, you have to understand the objectives of whoever you're speaking to, and then find whether there's a mutually beneficial relationship there, and what you can also do for them, not only what you can get from them. So with partnerships, it could be, for example, I don't know, revenue sharing, right? It could be, I don't know, sponsoring something of theirs. You have to really become open, and also find ways that you can also support their organization or their own initiatives, whilst also getting them to also support you with yours. And I think that's one of the key things, to let people kind of perk up and listen more. And then, of course, making sure that you have shared deliverables and timelines, so that both parties can stick to them. But of course, you have to also, follow up a lot as well. So you have to be quite relentless in general. And I think that probably goes for entrepreneurship in general.
Yeah, no, for sure. And then should I say from start to finish, the whole process, how long does that usually take?
Sure. So I would say if, let's say, all the documents come to us, the SME brings all the documents to us, and the buyer confirms in 2 days, then it could take 4 days, because obviously then the funding we also then provide funding after that. But that depends on how quickly the customer can upload the documents. So we made the platform very easy to upload the information. We're constantly updating it just to get customer feedback, to make sure that they are the next steps are very, very clear. But at the same time, of course, we understand that you have to do a bit of hand holding as well. So we're always happy to give our time to customers, just so that they can feel at ease with uploading some confidential information on the platform, knowing that it's secure.
Yeah, all right. That's good to know. And then also, could you give us a bit more should I say examples of the types of businesses that you're currently working with and who also you're looking to work with? And then what is like what stands out in when you're dealing with like each of these businesses, like in terms of like should I say the relationships, like how it works, like
Yeah.
yeah.
That's a great question, actually. Um, I would say in terms of the portfolio, so whilst we are sector agnostic, apart from, of course, mining, oil and gas and so on, because of course the way it's structured, we have seen that there's more activity within the agriculture space, and which is good anyway because it allows us to kind of be focused on specific niches, understand specific silos and products within agriculture really well, and how the seasonality works and when financing will be needed and so on. But most of the businesses have been like fruits and vegetables, so like exporting orange juice, pineapples, coconuts, soybean, capsicum, so like peppers, and yeah, just really those are the types of products that we've seen.
And just also one more in terms of like the countries that you should I say connected them with, or like you they tend to work with. Could you give us a few examples as well?
Oh yeah, sure. So they tend to export to Europe mainly, Europe and North America. So we've US, UK, Netherlands. Netherlands is really big for imports from Africa, actually, really big. France, um, what else? Spain. Yeah, so those are some of the big markets that we see a lot of imports from. And you asked a question as to what typically, I guess, do we like to see or from clients? I think it's very important that clients understand that when you're going to like a financier or a lender for the first time, help help them as well, because it's, a lot of the good companies that I've seen that we had really good green flags with had good documentation. They were willing to give you information quickly. They were willing to answer your questions efficiently as well. They actually, we gave them the requirements and they kind of went step by step, did all the work internally, and then came back and provided the organized information. And I think that makes it easier when you are also transacting with the business, because it gives them comfort that you have the right governance structure and also the right protocols in place. I do understand that, of course, a lot of SMEs don't have systems, right, that would allow them to make some of their, like, to have like such formal processes, but it's still important to start building or start finding out ways that you can streamline your own internal processes, just so that when you go to a lender or so on, it's easy for them to actually conduct their due diligence, because then you get frustrated if they keep asking you questions.
Interesting. I have a follow-on question in terms of understanding a little bit more about like the solution.
Sure.
Very simple. How big are the transactions? What's the range of amount in terms of like monetary value?
Sure. So we've done from 5,000 to now looking at one that would be about 400,000 a month. But that is in contract value, by the way. So for a lot of customers, for example, they would have a contract with Tesco, for example, that would say deliver 6 million products annually. And then every month they will send, let's say, 200,000 or 300,000 until we get to that 6 million. And then we finance like 75% of that, of each invoice. We don't do 100% just because there may be a shortfall when they do ship. So we want to kind of safeguard ourselves. But yeah, so typically the transactions have gone from minimum about like maybe 5,000, and it can go up to about 400,000. That's like a new deal that has landed in our pipeline.
So is that in like units or like in like
That's in like dollars.
dollars?
Yeah.
Okay, all right.
Really cool. So you guys are printing money, fair enough.
We're using foreign capital. So yeah, so that's a benefit. So a lot of the financiers overseas, right, are looking for exposure to like new assets. Because if they were to invest in maybe a similar asset, maybe in Europe, the rate, the returns wouldn't be as high as they would if they were to invest in Africa. Because in Africa, we don't have as much alternative lending available, right? So, and it's, the alternative is very expensive, unsecured lending. So as such, we're kind of essentially creating an arbitrage to make it more affordable for the SME, but also provide more returns as well for the financier.
What kind of financiers do you have?
Sure. So one is like trade finance funds. So with trade finance funds, of course, they understand the product, they understand the markets. So they're ones that we've been engaging with. We've also spoken to like impact funds as well. With impact funds, they of course have an incentive to support SMEs in Africa. And the interesting thing about them is when they lend to an institution like ours, it would be at a more affordable rate just because it's an impact fund and their incentives are to make cost of capital or borrowing much cheaper. And then you also have like angels, high net worth individuals who are interested in the proposition in general.
Really cool.
Yeah.
My next question is slightly different. So it's thinking about, at the start of this conversation, you told us how you're going to impact assessments and why you go into it. Thinking about that why and thinking about where you are today,
Yeah.
has the journey been fulfilling?
Definitely has been fulfilling. The impact journey has been fulfilling because I think you get to see, the impact straight away. You get to interact with the businesses that you're supporting. Like I've visited the farms of, customers and you see the scale of some of these farms is huge. And it's been so nice to see because it's like the money you're giving is funding, the production and you're just and you're just seeing how amazing that is. And also a lot of these SMEs, especially the larger ones. So like we even have some big names on the portfolio. They're essentially financing or funding the community. Like they're employing so many farmers in a specific community that they're known in that area. And it's very nice to see. Also, we've seen that um, when you give financing to a lot of these SMEs, right, their invoices goes up quite significantly. You get to see, let's say you start financing 5K, then it goes to like 20K 1 month, and then all of a sudden it's higher. The volume is higher every month, and then they have other buyers that they're supporting. So that one is also very interesting, especially the small to mid-sized SMEs, because you get to see their growth, and it's like you've been part of their journey from the beginning. So for me, it's been very, very, very fulfilling. Um, yeah. And I also like the fact that, for me, it's important to know that like impact doesn't every business in Africa has some form of impact. And impact doesn't necessarily mean you have low returns as a result. You can have a really high growth business and still deliver impact. And we've seen so many examples on the continent, like, mobile money, how we had M-Pesa and or, so on. And how it's now transformed the way, Africa works. So that's what we are doing. We're transforming the SME space and also working capital allocation in Africa.
Love to see it. There's this book called Prosperity Paradox and kind of touches around what Liquify is doing about markets creating innovation, and the concept that when people begin to partake in their community, either
Yeah.
as investors, producers, or consumers, they are more likely to change the way they think about their community and to foster economic growth. So the idea of you, Liquify, providing finance to some SMEs who then employ people who can then send their children to school, that ripple effect of creating an
Exactly.
economy where there probably wasn't. Right. I
Absolutely.
really think that's cool.
No, no, definitely. When we see that, a customer that is employing, let's say, 400 farmers, and that is remarkable. And exactly what you've said, it's essentially creating value economically in a different scale. And if we have a lot of those kind of businesses, right, and we're funding a lot of those businesses, you can only imagine what that would look like from a macro level and like, from a country level and then the continent level as well.
Yeah, that would be Africa's big switch. See
I
what I did
know.
there.
Oh, I like
Um,
that.
one last question before actually passing the mic to Asana, which is, what does the future of Liquify look like?
Oh, nice. So the future is that, of course, we are in, the key markets that we're serving, Ghana, Nigeria, Kenya, would be to expand to other Anglophone countries, with, of course, a similar legal framework, just so it's easier to expand. And then, of course, then look to, for example, Francophone countries. And then on a product level, though, the main thing we're trying to do is really gather a lot of data and insights on these SMEs, the industries, how it behaves, their repayment schedules, and so on, just so that then we can potentially offer different types of products with other lender facilities to them. Because the main thing that we're finding, of course, with SMEs is lack of asymmetric information. A lot of the SMEs don't know maybe why they may have been rejected for a loan elsewhere, like in a bank or so on. So it's really creating a really good data suite, using technology to actually learn the behaviors of all these industries and the SMEs in general, and providing them with a range of product suites. And then, of course, from the technology perspective, there's so much that we can do with the data and also on the platform. And that we can't share right now, but there's a lot of opportunity, of course, using machine learning, AI, of course, to simplify the due diligence and KYC process, even how we obtain data as well in terms of like the invoices from our partners and to make it easier, and reducing the onboarding process. So there's a lot that we want to achieve over the next 2 years. So we're working hard to get there.
That's amazing to hear. And I guess we're gradually like now rounding up, but then I do have also two questions as well. So in terms of like your whole journey with Liquify, like what has been the most rewarding part of it? Like, do you have any like personal like success stories or like stories from SMEs you've helped? And that's the first question. And then the second question would be like, what would your advice be for like aspiring entrepreneurs like looking to enter like this fintech space within Africa?
Yeah.
So I can repeat the second one later, but
Yeah.
yeah, the first question more just like success story or rewards like you found. And then the second one, any advice?
Yeah, sure. So for me, it would have been good to get my co-founder's opinion, but for me, I would say one of the things that when we began trading, I think for me, I thought that the SMEs that we should maybe mainly be focusing on is maybe just the larger SMEs, which of course that's one of the key in types of businesses we look in our portfolio. But what I found is that the SMEs that are maybe smaller, but then have a trading relationship with a large buyer, that is very interesting because with them, they're very small, but so their volumes are low. But then once they get the capital, it kind of grows so much, like the invoice amount grows so much because really a lot of the buyers, what they want to see is that there's consistencies in shipments from the SME because they can't order a large quantity with the promise that you deliver if you don't have the capabilities or the resources to do that. So one of it is like one business in particular that, like we started with this very small volume, I think like a 5K or probably a bit less. And now, now the invoice per month is growing extensively, to like, I think about 20,000, and that would be like a week. And then now there's another buyer that they'll be shipping to as well, that we will also be supporting, we're supporting the transaction for. So for me, I would say being able to see those like smaller SMEs that are trading with the big, corporates and want to do more, but they don't have the resources, and being able to directly see how we've impacted, the growth of their business, and their feedback to us. It's really great. I really like seeing that. So yeah, I'll say that's one. And then the second question was, what was the second question?
The second question was more like advice to like entrepreneurs looking to get into the fintech space in Africa. Any advice?
Yeah. So I would say there's a lot of opportunity in Africa in general, and I know that there's a lot of remittance startups, but I think businesses should start looking at maybe other types of fintechs as well, other types of products or product suites that they could actually introduce into the market. But I think one, of course, do your research, because like a lot of things are maybe not maybe fully as developed also, people would assume that you can just come and fix a problem. But there's a reason why maybe a problem hasn't been fixed. There's some underlying things. It could be regulatory, it could be behavior, customer behavior, and so on. So it's very important for you understand the market, do your research, understand the players, speak to maybe previous founders that have maybe attempted what you're thinking about doing, if you can find them. So I'll say definitely do your research. And build up on existing businesses that have attempted to do that, because it's best to be learning from something than kind of just going from 0 to 1 is much harder. So yes, definitely learn the regulatory landscape as well, and be on top of that. Establish relationships in the ecosystem in general. People are really really helpful in Africa. Like we've had such great support, referrals to like VCs, financiers, SMEs, and so just ask. People have been really, really helpful. And also one of the key things I would say is, I understand that sometimes the systems here may require you to kind of like may require you to speak to someone to just make a referral, or maybe sometimes it could be cut corners, but really stick to your processes, because it could potentially come back to bite you. So I would say stick to your process. If you have a framework, a due diligence process or KYC process, and so on, stick to them so that you have a sustainable business. Because you don't want to make a mistake before you've even began to actually grow your product.
I like it. I'm writing notes. Really good. So we're basically at the end of the episode. And there's this question we always ask our guests, which is, if you're to travel anywhere in Africa on an all expense paid trip, where would you go and why?
I think I'll go to Senegal, only because I've seen a lot of pictures and travel groups going to Africa and going to Senegal the past, I'll say 2 to 3 years. And like the color is beautiful, the culture is amazing, and it's very, very picturesque as well. So it's definitely on my list. I'll say Senegal. And then Zanzibar. Because I have to I have to relive my dreams of going there, since I couldn't go during COVID.
Yeah, yeah. Need to get your money's worth on that Zanzibar
Exactly.
tickets. But yeah, Senegal is up there for me as well. It seems very
Yeah,
chill. Seems like a good place to relax.
exactly. Oh, the pictures are so beautiful, and it's so colorful. I don't know if
I
you look.
s- yeah, I have like the seaside, and I think the people are, I think they give me very calm vibes. I mean, coming from a
Yeah.
Nigerian, probably everyone gives me calm vibes.
Yeah.
But yeah.
I was in Nigeria in December. I've been there to Nigeria twice. I love like the Nigerian culture. I love like how smart Nigerians are. I just love how, um amazing like Nigeria is in general. Um, but I think I would definitely go to a calmer country. I've been to Uganda and Kenya, and I think that in terms of their temperament, it's probably similar to Ghanaians, because Ghanaians are a little bit more calm and a bit meek, I have to say.
I agree.
Yeah, a bit too calm, for my liking. But I do love Nigerians like proactivity and like being able to get things done. That's what I love about Nigeria. I'm always comparing that to Ghanaians. I feel like we need a bit more energy,
More energy, more passion.
more passion.
I was thinking
I mean,
about that. Oh my
yeah,
God.
all the startups, like some of the big startups are in Nigeria, And I
Mm-hmm.
remember when I was at Sea Stars, and when we would get like inbound, let's say pitch decks and stuff, a lot of the applications were from Nigeria. I can say 90%. We're from Nigeria, yeah, Nigerian startup. So a lot of people are creating things in Nigeria, and that's what I find so exciting.
Nigerians are hustlers. Like, I don't even know what it is, but what's in their journey?
Have you seen that meme? Ask sister.
No.
It's like, I'm a hustler like sister. It's just, I don't know if it's a kid or if it's like an adult in a kid's body, but like, it's just a funny one. It's just because she's like, I don't talk, like, if I only talk about money to sister, ask sister. And she was very sassy about it.
Send it to me. I want to see it. I want to laugh.
I'll send it once I find it.
Yeah.
But yeah, thanks Alberta for doing this. For anyone listening, this is Africa's Big Switch. We just interviewed the co-founder of Liquify. If you're interested in anything that we spoke about, reach out to Alberta. Her contacts will be part of the details in the episode. Either interested as an investor or as an SME trying to take part in this. Thank you so much for doing this, Alberta. Really cool conversation.
Thank you.
Thank you. It was a pleasure. Thank you.